Hi guys, and welcome back to the channel. Now in today's video we're going to do a full portfolio update. The last one I did was in February of this year, so it's been around 6-7 months since then, so it's time to have a look at how things have changed. Back in February my portfolio was sitting at around that £38,000 mark, but fast forward to today and it's now sitting just shy of £57,000. That's an increase of almost £19,000 in just 7 months, so there's plenty to cover here. Currently my portfolio is split across 3 different accounts which have slightly different jobs. Now the first of which is over on Trading 212, which holds my individual stocks, and it's something that I've never shared before. Then we'll move on to my InvestEngine account, and then finally we'll look at my oldest account over on Vanguard. In this video, I'll break down each account, have a quick look at some of that performance, and then at the end of the video, we're going to go over some of the highlight stats of the performance, the growth, but also have a little look at my future plans. First, let's get started with that new portfolio over on Trading 212. Okay, so jumping straight into this portfolio over on Trading 212. This is a portfolio I've not shared before. This is one I've kept to myself, and it's been a bit of a journey over the last few months. So the total value, as you can see here, is just shy of £5,300, and just over £1,500 of that is gains. You can see that rate of return there of 208%, and you might be thinking, well, hang on, that doesn't quite add up. Rate of return is calculated a bit different, but I'll skip over that for now. I'll also be revisiting the gains at the end of the video and putting the more precise percentages towards that. So this is an account I decided after doing a lot of the ETFs investing for a while. I thought I'm now going to dip my toe back into individual stocks. So on the screen here, you can see that it was the 1st of May that I started investing here and slowly adding some funds into there, and you can see how it's grown. Now, over the last 3 months, that's where the majority of these gains have come from. But let's have a little look at what we've bought in here. So the first stock here, and probably my highest performer, is SOFI Technologies. It's a company that I believe in for the long term. I saw the opportunity earlier in this year with many of these stocks. In fact, when the market dipped, I thought this might be a great time to start investing in some of these great companies. So SOFI there, up over 105%, which is crazy. Considering I only opened this 1st of May, I started investing, so around sort of 4 months, if you like. Grab is the second one. So for anyone unfamiliar, Grab is essentially like the Uber but of Asia, if you like, and really believe in this company. The shares are super cheap at the moment, and I personally believe this is going to be a great company moving forward. Up around 28% there. AMD is the next stock there, around 33.5% gains there as well. 4 shares in Take-Two Interactive. So for those who don't know, Take-Two Interactive is the company that own Rockstar Games amongst other businesses, but Rockstar Games, the producer of Red Dead Redemption and also Grand Theft Auto, massive in the gaming industry. My justification for investing in this is obviously we've got the launch of Grand Theft Auto next year, so I wanted to get a few shares of this to potentially see some growth over the next year or so. I have in fact done a full breakdown on that particular stock. I'll leave the link to that at the end of the video, but also I'll leave that in the description. So if you want to have a quick look at that and going through a full stock analysis and how I sort of value companies, I'll leave the link there for you to have a look at. Next, I've got 50 shares in Rolls-Royce, which is up around, just shy of 27%, which is great. Palantir. A lot of people have Palantir in their portfolio. I bought in at a fairly good price there, so up 61% as well. So coming into the asset allocation, if we have a look here, largest portion, almost 25% in SOFI, then Grab, AMD, Take-Two, Rolls-Royce, Palantir. The one I didn't cover there was Oracle. I did invest at a bit of a market high for that stock, so I'm now paying the price a little bit, but I like the long term of that company, and it is one I will be slowly averaging into over the coming months and probably years. So this portfolio really, like I say, my portfolio entire value is around £57,000. This is where I'm finding the most fun at the moment, but I feel I have enough money invested in reliable ETFs and index funds that I can have a bit more risk here. My plan is to always, going forward, have 10% of my portfolio in these kind of higher risk stocks, if you like, in individual stocks. But as you can see, with high risk can come high reward. So, you know, these gains, you know, over the last 3-4 months have been unbelievable, and I found it really fun playing around with this. So yeah, not too much to cover on this Trading 212 account. If anyone's interested on the details around why I'm investing in particular stocks in detail, what I'm planning to invest in the future, and if you'd like portfolio updates of this small account, do let me know. I could always make a series on that. Okay, so now moving on to my second portfolio. So we're going smallest to largest, if you haven't cottoned onto that already. So just over £5,000 in my Trading 212 account. And then now over to InvestEngine. Now, this particular portfolio plays a bit of a different role. For any regular viewers, this is the portfolio that I do monthly updates on. So if you're interested in that, feel free to subscribe for those updates. But essentially, I built my own all-world fund, so it's like a DIY fund. And I guess the idea behind this is to create a globally diverse portfolio with lower fees than your typical Vanguard funds, such as VWRL and a few others. And it also gives me a bit more control. Again, I've done a full video detailing why I've built this, but this for me is kind of the main bulk of where I will be investing over the next few years. So if we take a little look here, overall, you know, sort of figures here, just under £8,000 in this account. I've contributed £7,000 into that, so you know, 854 pounds of gains there. It's saying we've got an investment return of 22%, and again, this is a portfolio I only started in April of this year, so it's already, you know, when you combine this one and also the Trading 212 account, these are already becoming quite large portfolios. I imagine for the average person, I've gone quite heavy into these portfolios and been really enjoying them. So breaking down what this is built up of, I've got my US exposure with the SPDR S&P 500 ETF, which is, you know, gaining just close to 22%. VERX, which is a developed Europe fund excluding the UK fund, up around 16% there. We've then got 9% within the emerging markets, another Vanguard ETF. The Amundi Prime Japan, which is around 6% of this portfolio, up again almost 23%. The FTSE 100 is held by a HSBC fund at HUKX, up around 17%, and then also the Vanguard Developed Asia excluding Japan ETF. So combined, these give me global exposure whilst keeping fees really low, and actually, compared to most global funds, this even gives me a higher dividend as well. The key with doing it this way is that if I sense a certain market is undervalued, I can pick and choose within this global fund which bits I add money to. So I don't have to add money to all of these in one go. I could pick out the Amundi Prime Japan ETF, for example, and invest just in that area. So again, really happy there. I think on this graph, you know, that blue line there are my contributions, and the green bit is then the overall portfolio, including the gains. And what the key is there is that you can see how each time I invest each month, that gap is getting bigger and bigger. So that's a really nice visual there. It shows how the compounding effect works. You know, getting small amounts of interest but on a larger pot of money means larger gains. So yeah, really interested to keep going with this. The key is to try and max out my ISA at the £20,000 mark. I've still got quite a way to go before next April, but yeah, we'll keep an eye on this portfolio, hoping to get this up to around sort of £11,000–12,000 by Christmas. Okay, so jumping into my Vanguard portfolio, decided to do this one on the desktop just because I think it's a bit better than the Vanguard app. They're not as slick as the Trading 212 or InvestEngine apps at the moment, but I know that is something they're developing. So top line figures within this portfolio, it is my oldest portfolio, and prior to investing this way, I'd done that thing where I dabbled with various stocks and various different platforms before really taking the time to learn and develop and understand how the stock market works and the best way to build value in that way. So if I come down to here, I started all of this recent investing journey on the 6th of February in 2023 with just £330, and it's really kind of escalated from there, I guess you could say. Learned a lot along the way, but yeah, you can see here on this sliding scale how things have really grown. Now, all of this point up to this point, the sort of £3,000 mark, that was all within an ISA. I then basically found an old workplace pension, which is why there was such a jump there of sort of £4,000-5,000. That's kept growing, regular contributions, dollar cost averaging into the market, to the point where we are now at, around just shy of £44,000, which when I first put that £330 into the account, I never would have thought it could have grown to this amount, but just shows that effect of compound interest. So around £35,500 of my own contributions, and around, just shy of £8,500 worth of gains. If I look into holdings, there's a bit of a mishmash here, and I'll be honest, and like I say, this is still when I was, it was a great strategy, and I've earned, really good gains off investing this way, but there's definitely slicker ways of doing it, hence why I've now created that InvestEngine platform, which I believe is the best way to get global exposure, and probably the best way to invest for beginners and average investors who don't want to be checking the stock market every day. But yep, to quickly cover here, we've got emerging markets in this ETF, the FTSE 100 in this one, an all-world one, so VWRL, so that fund on its own does a similar job to what the InvestEngine portfolio I've built does. We've then got VERX, which is a developed Europe fund. We've got a FTSE Japan ETF, S&P 500 ETF, and I think what might be quite interesting is if I go through calculations, so we can see, I think a key detail here of what that growth is built up of. £635 there of dividends. I love dividends because it makes the investing seem more real, and it also feels like you're getting a gift, even though it is your share of the profits from the companies within these ETFs. But yeah, quite a fan of dividends, and I know a lot of people invest purely for dividends and do that dividend investing strategy. If we go on to months though, this is where you might be able to see we've had a little bit of a roller coaster. So if I go back to January, the market was, the market in this portfolio was at an all-time high, £6,500 worth of gains, but then you can see it almost fell off a bit of a cliff. This is where Donald Trump announced the tariffs and that sort of tariff war that went on. And then since then, you can see, I did invest quite heavily. So these are my contributions here. When the market went down, I thought this is a great opportunity to buy certain funds at a discount, which I did. And you can see I've not contributed anything since April. That's because I've been focusing on my trading 212 account and also my InvestEngine portfolio as well. But, coming here, we were at £37,500. Considering I've not added in another penny, to be now at £44,000, it just shows that the market is volatile, but over the long term it will bounce back. So don't panic, don't sell your investments, and we've come out stronger than before. Some really strong months here, July especially, nearly £2,500 worth of gains in that 1 month. August is typically a pretty flat month within the market, I've found, so not much of a movement there, £16 decline, and then we're up nearly £1,200 for September as well. So yeah, really happy with the performance here. This isn't going to be a portfolio I add any more money in for the foreseeable. Never say never, but this is one that I'm just going to leave in the background now to keep compounding. But yeah, you can see here we've got a rate of return of 47.14%, which in the space of, what we're talking here, 2.5 years, 2 years, 7-8 months, around that. Really happy with the performance. Really glad I kind of went on this journey as well, because it just shows that money sat in a savings account would have nowhere near got to the growth that these have. Quick insight page here, but again, if you want to explore the Vanguard platform, I've not moved away from this platform because I think it's any worse than any of the others. It's just the sort of products and ETFs and stocks that I was looking for, you can't get on the Vanguard platform. So on the Vanguard platform, you can only invest in Vanguard ETFs. But for the average person, that would be more than enough. I just like experimenting with different funds and different strategies, and of course I make content on it, so I always think it's important to have a really well-rounded idea of different platforms, different products and how they perform. Yeah, so this page just shows where that investments, those investments are broken up, and also by sector and also country as well. So that's it for the portfolios, but what I thought would be interesting now is to go over some of those top line stats. With Trading 212, I've added in £3,762.98, and I've grown this to £5,285.43, which gives me a nominal return of 40.46%. Moving on to InvestEngine, which, if you remember, this is my DIY global portfolio with lots of diversification, which in theory provides less volatility and more steady, reliable gains going forward. In this account, I've added £7,000 so far and now have £7,854.86. This provides a nominal return of 12.2%. This is a portfolio I started early April, so this growth has been achieved in the space of around 5 months, which is really strong. And finally, my older and largest portfolio, which we just took a look at, I've added £35,603.02 and now have £43,855.46, which provides a nominal return of 23.17%. All of these accounts have provided slightly different purposes, but overall I'm really happy with these gains. So I hope that gives you an insight into my portfolios and my investing strategy. Overall, I've been investing for around 2 years and 7 months, and I can already see the massive gains we've achieved in what is a relatively short space of time. Looking ahead, my plan is to keep that Trading 212 account growing, but the plan is to keep this at no more than 10% of my overall portfolio. Dealing in individual stocks has been more fun and a more exciting way for me to invest, but I do know the risks that come along with it. Alongside this, I do plan to keep averaging in on that InvestEngine portfolio at around £1,000 a month so it can compound over time. In the coming months, I expect this portfolio to pass the £60,000 mark, and then after that, I guess the main goal is hitting that £100,000 mark. I don't know what it is about hitting that 100 grand mark, but it seems like a bit of a goal for most investors, as I think that's when the compounding effect really starts to take over. If you're interested on updates on month to month on my InvestEngine portfolio, then I welcome you to subscribe for these. If you're interested in my individual stock picks, then let me know in the comments and perhaps I can do monthly updates on this as well. As always, thanks for watching and I'll see you in the next one.